The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
In 1887, the first law establishing the CPA designation was enacted. Hi, I'm Scott Cheslowitz, CPA and partner of the firm Rothenberg & Peters. For decades, our firm has represented individuals, corporations, partnerships, as well as estates and trusts successfully through the maze of the ever-changing tax laws. Please contact us at rothenbergpeters.com. That's rothenbergpeters.com, or call 516-773-3200. The tax return should be the culmination of proper tax planning from the previous year. In 1887, I do not think CPAs could have predicted the complexity of tax laws today. Tax planning is the first step to a well-prepared tax scenario. Please feel free to contact us for a comprehensive tax review. Visit rothenbergpeters.com. That's rothenbergpeters.com, or call 516-773-3200 for an immediate appointment. Hello, everybody. This is Scott Cheslowitz bringing you another super exciting segment of Tax Talk. And every week I try to share something that would help somebody, whether it's somebody that's struggling or somebody that needs some tax tips. There are well-heeled people out there that, they need advice as well. And today I'm bringing in Albert Hakim. But before Albert comes on, again, you can reach me at rothenbergpeters.com, rothenbergpeters.com, 516-773-3200. And Albert, why don't you share with the audience a little about yourself and how they can reach you too?
Fantastic. And thank you very much, Scott, for the opportunity to be on with you. My name is Albert Hakim. I am a certified merger and acquisitions advisor with the Kensington Company. And you can see me on LinkedIn. Just type in albert.hakim. And my phone number is 516-626-2211.
Right. And the spelling, just to play it safe, of Albert's last name is Hakim. And Albert is a guy who is a master at M&A, and we're going to talk a bit about that. Albert, as an M&A professional, helps clients prepare for business for sale. What have you seen the effects of COVID do to potential sales or purchases of businesses?
So interestingly enough, Scott, you would have thought going into COVID and living through that we would see a significant amount of decimation. And it was challenging to many sectors, hospitality, restaurants, things like that, took it on the chin. But if we're looking at Long Island, by and large, we didn't see blocks and blocks of businesses go out of businesses. Some did, obviously, but supermarkets stayed in business, food distributors stayed in business. Certainly, online picked up, and you could see where people actually did very, very well through COVID. So what happened on our side, we had that initial pause in March and April when, quite frankly, we didn't know if the world was going to end.
Right.
But then activity really picked up. And what ended up happening was there was no lack of buyers out there looking for solid businesses. And if your business was able to pivot in such a way where you were able to kind of sustain through COVID, you now became very attractive to the people looking to acquire those businesses. So it turned out to be a pretty good thing for sellers. And I know you and I will talk about what's going on, with the low cost of capital,
right,
making it a very good market for buyers. So it's kind of a perfect storm that I've never seen. It's equally kind of a seller's market and a buyer's market.
So
the buyer can buy a more expensive business and actually pay less for it.
Absolutely. And, the currency exchange rates come into play as well with foreign buyers and, trying to take advantage of the dollar when it's weaker. Yesterday, when Bitcoin took a bit of a hit, though, cryptocurrencies, the dollar's got a little stronger. But, buyers and sellers have to look out for so many things, Albert. I have to think, depending on the industry you're in, valuations may have taken a hit for some industries. And at the same time, I've got clients that they just had wonderful years on the rebound, as you were pointing out. So the industry is important. But Albert, how do you manage clients' expectations? And, the valuation has to be done by an appraiser that is respected by the government, obviously. We'll do some tax talk in a minute on this, but expectations are always something I try to manage with clients as well.
Yeah, and it's critical. And the reason it's so important is that you don't want to waste everyone's time going down the road with the wrong expectations in place. So that's why I am a real advocate of having the right team, either surrounding the buyer or the seller. Because if you've got the right people around you, they're going to talk to you in a straight way, and they're going to help guide those expectations.
Right.
So, look, every seller thinks their business is worth, more than it is, and every buyer thinks the business is worth less than it is. and therein is where you really need the professionals to kind of guide things. But I want to shift your question just a little bit.
Sure.
Because the other side of that coin, Scott, are the sellers who never understood the value of their business. So maybe they're thinking about their business in such a way where they undervalue really the opportunity because, many of these bread and butter businesses that truly are COVID resistant, pandemic resistant, and let's throw the big one in there also, internet resistant. These businesses, maybe they're service-based, maybe they're distribution, but the internet can't replace you. They are very attractive today, given what we've been going through. Yeah. So, very often sellers, without talking to professionals like myself, like yourself, may be leaving money on the table.
Absolutely. And I just want to interject also to the sellers and the buyers, but mostly the sellers with this comment. It's not what you make, it's what you keep. So,
without a doubt.
Right? So the tax planning is uber important when you get to selling a business and buying a business, whether you're selling the stock or the assets. Very important. Again, you need a proper valuation. You need an agreement between the buyer and seller. If you're selling the assets of the business, the buyer typically wants to buy the assets because then they can take depreciation or amortization on those assets. They can write off machinery and equipment, for example, over a shorter period of time. They want more things that they can get a deduction from, opposed to buying the stock. Now, if they buy the stock, there's things they can do. If the target's an S Corp, they can do a 338H10 election. If the target's a C Corporation, then they can do a 338G. So, and if you have a partnership that wants to get involved in this, they can do a 336E. So it's very important to have true professionals in the ring. And the reason why Albert's on this show is he's going to give you straight talk, but he's also a nice guy and somebody you're not going to be afraid to call and speak with. That's important to me, Albert, that we bring not just professionalism, but that we're people too with our clients. These are tough decisions that sellers are making, tough decisions that buyers are making. So it is very important. And, Albert, some sellers do well in this market, but some don't. So you could speak to my last comment, and you could speak to what makes a successful seller or an unsuccessful seller.
Great. So I'm just going to repeat something that you said because I think it's so important that your listeners really take this to heart. First of all, this notion about it's not what you get, it's what you keep, that is sage advice. They really have to, listen to that. So, and again, the other side of that, Scott, is, and this is where I appreciate you calling me a nice guy, but there's a reason that they're selling. And sometimes the seller needs to sell for his own mental health. He needs to get out, or she needs to get out. Sometimes they need to sell because it's a health issue. Somebody passed, a partner is no longer there. There is stuff going on in people's lives that sometimes the best answer is, pay the damn tax, get me out.
That's right. Albert, we're coming up on the end of my first 10-minute session. And again, I'm Scott Cheslowitz. My contact information is at rothenbergpeters.com. And you're listening to Albert Hakim of the Kensington Group. And we will be back with another session in a moment. Hello, everybody. Scott Cheslowitz back with Albert Hakim. And Albert, I cut you off there. And, what makes successful sellers or unsuccessful sellers in this market at this point?
So if we're defining success as a higher multiple, a higher valuation on their business, then it's the kind of business that they're in and how they're running it. Mm-hmm. You can have two exact businesses. A great example is the guy who owns a sign shop. And one owner loves making signs and spends his time making the signs, building them, and the other owner never really steps foot in the shop, but he's out networking and selling. Two exact same businesses. Which one is going to be more valuable to the market? Mm-hmm. Clearly, the business where the owner spends time bringing in the business rather than actually executing, making the signs.
Right.
So things that your listeners can keep in mind if they want to improve their businesses for higher valuation is try to figure out some kind of recurring revenue component to your business world. Mm-hmm. If you're a plumber, is there any possibility that you can get people to get signed on to your newsletter about how to keep your pipes clean that you put out on a monthly basis? So you have some kind of monthly recurring component as part and parcel of your business.
Right.
Because interestingly enough, your listeners will get this one. Alarm companies that have monitoring services that you subscribe to every month, they get crazy multiples as compared to a restaurant where
Sure.
only as good as the last meal you served.
Absolutely. Albert, it's interesting. I tell people who are interested in selling their business, you don't wake up one day and say, today I'm going to put a for sale sign out there. You've got to prepare, right? It's like selling a home. You've got to stage it. You've got to get it to the maximum efficiency in terms of revenue generation and everything you could, cost savings, to make it look as desirable as possible, and actually not just make it look, make it be as desirable as possible. And you want to put yourself, to your point, in a place of getting a compensation agreement later on, because the guy who makes the signs, they're very expendable. The person who has the relationship with the client base out there, that's valuable, right, Albert?
Correct. And on that point, let me give you another wrinkle there. Just, again, just to keep your listeners on their toes, is if you're selling your house, right, and you bring in a real estate expert and you say, you know what, my plan when I'm selling this house is that I'm going to take my old dilapidated master bathroom and I'm going to put a double sink and a bathtub and a jacuzzi, and I'm going to spend money and I'm going to make it more sellable. Mm-hmm. Well, would you ever make that decision without asking a realtor to advise you to say, well, you could spend all that money. It's not going to raise the value of your house. That's not what people are paying for.
Right.
They're paying for you to put the money elsewhere, in the kitchen maybe. So it's the same thing with your business. Who's your buyer? Who ultimately is buying this business, and what aspect or what improvements might they value, and turn your attention to that.
Right. I tell people this every week. It's taboo to say this, probably. I'm not trying to surgically remove money from their wallets, but they need to spend on qualified people, qualified professionals who give quality advisory services. You know, I wouldn't say that if I didn't believe that it comes back to you exponentially. So when you're buying or selling a business, you need quality professionals to put yourselves in the best positions, not just during, but after. So please keep that in mind. If you look at everything as a cost center, you may be costing yourselves in the long run. Albert, again, how can they reach you?
516-626-2211, or connect with me on LinkedIn. Just look up Albert Hakim, Hakim.
Right.
And Scott, I do a lot of educational videos, so they can, if they connect with me on LinkedIn, you'll see the links there to all kinds of information, both on the buying side and the selling side. I
love it. And again, Scott Cheslowitz, you can reach me by visualizing my contact information at rothenbergpeters.com, or call me at my office, 516-773-3200. And Albert, you know, go into some of the common mistakes that sellers should avoid when they're looking to sell a business.
So certainly, and you mentioned the number one mistake yourself, not being prepared. You need to be prepared when you're entering this process as a seller or a buyer. As a seller, it means having ready what the buyers are going to need to see. Financial statements, things related to how you source business, things related to the issues that you have in the business. There is no perfect business, and every business has its risks and challenges. And what you need to be prepared with is a way to address the inevitable questions that a buyer will be asking, because they're going to take you to task, because they want to make sure what they're buying is clear, legitimate, and the springboard for their future.
Right.
Then we have the little ones, unrealistic expectations. You touched on that as well. Intransigence, false deadlines. If I don't get the offer by the end of this week, I'm not selling. Really? Since you get a really great offer on Monday, you're not going to sell because you said so on Friday. So, and I can't stress enough the things that you've been talking about. Having the right people around you really help inform and guide this process.
Exactly.
As a buyer, I want to throw one out there. As a buyer, you've got to really know why you want to buy a business. When I see a client, my questions are not about what kind of business you're looking for. I save those for later. I go into, why are you going into business? Well, what are you looking to accomplish? What are your goals? And because if they don't know, you have a high likelihood that the thing is going to fall apart as soon as the buyer either realizes the time commitment involved, or the amount of work, or the amount of money.
Yeah. And capitalization's a key.
Sure.
If I may for a minute, I was given a referral about a company that was just purchased by a gentleman, and he paid 7 figures. And when we were talking about a retainer because he needed more bank financing, right away I get, I'm kind of short on cash. And, if that was the case, or he just didn't want to pay the retainer, I don't know. You're in tough waters there.
Yeah. How are you buying this business? So I can't tell you how many calls I get, people looking at these $2 million, $3 million businesses. And my first question is, okay, what kind of down payment do you have for financing? and I hear maybe 1%, 2% down payment. And so, without being derogatory, how in the world are you getting a business like this financed? Have you thought this through? So, they've got to be qualified. They have to understand the process. They have to understand why they're going into business. And the questions I'm asking is not just to disqualify them. It helps me do a better job of putting them together, pairing them with the right match in a business.
Absolutely, Albert. This was wonderful. Like all my guests, we can talk for probably hours. And again, Albert, please tell them how you can be reached.
Great. 516-626-2211, or you can go to kensingtoncompany.com and see my profile on the website, or connect with me on LinkedIn.
Beautiful. Scott Cheslowitz again, rothenbergpeters.com, 516-773-3200. Speak to you next week, everybody. Take care.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcast.